At the New Jersey SBDC Network, our mission is simple: to help businesses grow and succeed. Our consulting, training, and information services make it easier for businesses to reach their potential. Whether you're currently in operation or just starting out, we have the right tools, resources, and expertise to help you succeed. Visit us online to get started on your path to success today.
A pleasant good afternoon to everyone. My name is Dakoa Bell. I am an event coordinator for the NJSBDC at Rutgers-Newark. And on behalf of Dr. Tendai Ndoro, the Regional Director, I would like to welcome you all to our Optimizing Your Business Model to Improve Profitability webinar. For those of you here that are unfamiliar with the SBDC, it stands for Small Business Development Centers. And here at the New Jersey Small Business Development Centers at Rutgers-Newark, we serve as the premier provider of business training and technical assistance services to establish small businesses, startups, as well as to entrepreneurs. We are one of 12 centers in the NJSBDC network, and we service those within Essex County. Our center is hosted by the Rutgers Business School and funded through a partnership agreement between the Small Business Administration, Rutgers University, and the New Jersey Business Action Center. Our mission is to help entrepreneurs as well as business owners start and grow sustainable, successful businesses through the delivery of one-on-one business consulting, training, and technical assistance programs. Now, these services are provided to you at no cost and are paid for by your tax dollars. If you or your business is located in Essex County, our website is www.rnsbdc.com. And on the top right-hand corner of our site, we have a button labeled Request Counseling. So clicking on that button will lead you to fill out some information about your business, including the help you are seeking. And within 24 to 48 business hours, a consultant will reach out to you for an assessment. And for those of you here that are not in Essex County, our headquarters website is www.njsbdc.com. And on that website, you can type in your county and it will refer you to your local SBDC office. For the benefit of everyone attending today's webinar, we will be taking questions via the chat feature or the Q&A, but you also have the ability to unmute yourselves and ask your questions via audio. So feel free to post or ask your questions in any of these ways, and we will do our best to respond during or at the end of this webinar. A copy of the presentation slides, along with a video recording of this webinar, will be emailed to you within 48 to 72 business hours, so that you can refer to all this information long after the webinar has ended. It is now my pleasure to introduce to you all our presenter for today's webinar, Andrew Frazier. Andrew is the CEO and owner of Small Business Like a Pro and is an SBDC consultant here at the NJSBDC at Rutgers-Newark in the areas of financing, capital, loan packaging, and credit counseling. And now, without further ado, I will turn today's presentation over to Andrew.
Okay, great. Thanks, Dakoa. How's everyone doing this afternoon? Welcome to the webinar. Welcome back to those of you who joined in earlier, a little bit earlier, to talk about growing your revenues. This session, we're going to be talking about increasing your profitability. So definitely first you have to grow your revenues and get revenues. But once you do that, you still have to make sure that you're making money. So, looking at your profitability and how to ensure that you're profitable and understanding that and having a plan for that is critical. So really, that's what we're going to be focusing on this afternoon. So before we get started, I just want to take a sec to welcome you back. Welcome back, Tanisha, Mel. Let's see, we got a couple of new people as well. So before we get started, let's see. Let's just talk about what you're going to learn at this webinar and what we're going to focus on. So if we take a look, really what we're focused on learning today, or this time, is really looking at what is your business model, understanding what your business model is. If you know what your business model is, please type yes in the chat. If you're not sure what your business model is, type not sure, because that'll help me just get a feel for where everybody is. Okay. And it's okay. Most business owners don't really know what their business model is. And that's one of the things that we want to make sure we cover, because it's something very important that you should know about as a business owner and understand. Okay. Thanks, Mel, for putting that in. Anybody else? As far as their business model, you know what it is. Business model canvas, possibly. You can let me know after we go over it. Let me know if it's the same or not, but I would suspect it's probably a little different, or at least the way I look at it, it's probably a little different. But okay, great. Anybody else? Okay, so so we're going to talk about, what is your business model, because it's important to understand that, but not only what it is, why it's so important and why it's so valuable for you to understand it, and what knowing it and using it can do for your business. And then, really using your business through your business model, that's the best way to work on improving the profitability and optimizing your business model for success. So that's what we're covering today, is your business model and how to use that to make you more profitable as a business. You're going to learn what it is and how it works. You're going to look at it and understand what it's telling you, because really it's a tool that tells you valuable information. And then also we'll take a look at some tools and some ways that you can optimize your business model and how to do that. So those are key things that you're going to learn today. And then because of this, it'll help you to be able to work on your business instead of in it. And, by doing that, that'll help you to develop your strategy and really focus on making your business better and more profitable. So it prepares you to be able to grow and be more successful. So really that's what we're talking about today. So if this is what you what you're here to talk about, just type yes if you're interested in learning more about this. And if not, then you might be in the wrong place, but hopefully you're in the right place, because as a business owner, this stuff is extremely important. So if this is what you're interested in learning more about, just type yes in the chat, and then we'll get started in a minute. Okay, thanks, Mel. Thanks, Tanisha, and thanks, Sherry. Okay, great. So so let's get started. What do we have? So just a quick intro. Some of you were on the last call, but my name's Andrew Frazier. Started out as a paper boy back in Pittsburgh many years ago. That was my first business experience, but I've had several businesses and business experiences since then. But I studied mechanical engineering and got my MBA and worked as a manager, an executive, nonprofit leader in many different roles. And I bring that experience to my coaching, consulting, training. And also, I'm author, wrote the book, Running Your Small Business Like a Pro, do speaking, and created the Small Business Pro University. So, that's really a little bit about my background. Because of that, I have, a lot of experience in different areas. So this presentation is not going to be focused on one discipline, but, a holistic view of how you do this based on your business. And, looking forward to share that. We've got a couple new people. Anyone want to say hello and say a little bit about what your business is? We can take a second to do that if you'd like. No pressure, but if you'd like, feel free to unmute and jump in real quick. So, okay, cool. So now, the first thing we talked about is, what is your business model? Understanding what it is. So when you look at your business model, your business model tells you how your business works and how you make money and what type of money you're making, looking at your revenues and expenses, and you can use that to plan and project and really lay out in advance what you expect to have happen and what your goals are and how you're going to achieve them. So that's really what your business model is about. And what it does is, one, it helps you measure your performance, because you can't improve upon anything that you don't measure. So your business model allows you to measure your performance, understand your business. A lot of people have been in business a long time, but they don't really understand how their business works because they don't understand their business model. So that's an important understanding that you need. It helps you control your business, really be able to manage it more effectively, control what's happening on a more real-time basis. And then it helps you to improve your business and continually improve and move your business forward. So, your business model can help you do all those things. And unfortunately, most business owners don't know what their business model is and don't use it for those things. So they're putting themselves at a disadvantage. So what you're learning here is key. And the earlier you learn this, the better, because you can use that in your planning purposes and really set yourself up to be more likely to succeed in a greater way. So that's why you want to understand your business model. When you think about as a business owner, there's really 3 critical steps, or the critical path, as I call it, to really growing and moving your business forward. The first step is you have to work in your business. You have to create the products and services and find a market. So you're really focused on product and services delivery. But once you find, your market, and you're able to, grow sales and maintain sales, then your goal needs to be working on your business. And working on your business is really about business model optimization, really being able to improve your profitability, set up systems and processes, create greater capacity so that you can scale. So, you go from working in your business and you want to go to working on your business. And once you have that, once your business model is optimized, then you can focus on expanding rapidly and scaling. And that's really where you're focusing on the future of your business, how you're going to expand, how you're going to grow, increase revenues, and your strategies around that. So those are really the 3 steps to the critical path to being able to create a sustainable business. But, it starts out working in your business and, developing your products and your market and your service delivery, which is really part of what we talked about in the previous session. And then this session is really working on your business, working on your business model optimization. So one thing that's important to understand is that few business owners ever get to working on their business successfully. Really, less than 5%. So why is this? Why is it so hard for people to do that? And one of the reasons is that it takes different skills. Marketing and developing your market is one skill, but working on your business, it's real more like you're managing your business. So, in the first step, you're more of like an employee or a supervisor working on product and service delivery. But to work on your business, then you have to step back and really work on managing your business effectively. And not a lot of people are able to do that or understand that they need to do that. And then even if they do, they may not have the skills and capabilities, because working on your business requires analysis, working with numbers. And a lot of people are afraid of numbers, even they shouldn't be. But to be a successful business owner, you have to understand your numbers. You have to work on your numbers, and doing that through the business model. But doesn't have to be that hard. We're not asking you to do calculus or trigonometry or really even algebra. We're asking you to add, subtract, multiply, and divide, and do that using a calculator. So if you can do that, then you can effectively work on your business model and move forward. But it's not as easy as it seems. So not a lot of business owners make it all the way through to that step. But let's talk about what that looks like. So, it's really about understanding your numbers. At the end of the day, one of the key things that I work with business owners on is really helping them to understand their business model, how their business works, and how to take that information and run their business even better. And we're going to talk a little bit about that, but it boils down to understanding your numbers. So understanding your numbers, what does that mean? We've got the business model, and the business model tells you about how you're generating your revenue, how much revenue you're generating. But it also talks about your costs. How much does it cost you to generate the revenue? And then you can, based on that, you can look at, okay, are your margins adequate? Are you making enough money versus your costs? And how do they interplay? So that's really what your business model is. It's looking at your revenue minus your variable expenses, gives you your gross profit, minus your fixed expenses, gives you your cash flow or operating profit. So that's what we're going to be covering today, is understanding your business model. And if you're not familiar, it looks like something else. Anybody have any idea what that business model layout also looks similar to, or looks like, or could be considered? Any idea? It's based on one of the financial statements. There's 3 key financial statements, and it's based on one of the 3. Anyone want to take a stab at which one? Okay. All right. Fair enough. So you'll be learning a few things. So let's take a look at this, and the business model is based on the profit and loss, your P&L, or what's also known as your income statement, which is one of the 3 primary financial statements. So, if anyone wants to know about your P&L or income statement, it's similar to this. Generally, the business model, you're using it in the future, whereas the financial statements are generally in the past of how you performed, and you're using the business model more for planning for the future. So that's what the business model is. Who wants to learn a little bit more about it? Okay, Mel, profit and loss. Good, great. who wants to learn a little bit more about it? So if you're ready to learn more about the business model, just type ready in the chat, and then I'll know that you're ready to move on and you know, learn the pieces of the business model and how to use those pieces to run your business more effectively. So yeah, so just type ready. Okay, Dolores, thanks. And anybody else? Okay, Sherry, thanks. Mel, great. Okay, so let's take a look at the business model and how it works. So the first piece is revenue. So over on the side, we've got the P&L areas, the key, and the first one's revenue. So the first goal is to grow, generally to grow your revenue. You want to grow your sales. So looking at your revenues, you want to understand where they came from, but also you want to use the business model, think about, well, how can I increase my sales? What should I be doing to grow my revenue? On the other side, you've got your cost of goods sold, which is your variable expenses. So that's about, how do you lower the percentage cost of delivering your products and services? So if you think about it, as a simple example, if you're in a store and you sell soup, if you're selling soup for $1 and it costs you 50 cents a can that you sell for $1, then your revenue is $1 and your variable expense is 50 cents every time you sell a can of soup. So understanding that percentage, now if you're able to decrease the cost to 45 cents per can, or per can, so that's saving 5 cents, basically that brings your percentage down to 45%. So every dollar of sales, instead of it costing you 50 cents, it costs you 45 cents. So the goal is really to decrease the percentage of the cost of goods sold, or the percentage of what you're selling, your sales, that goes to variable expenses or cost of goods sold. So what are ways to do that? Any idea of some ways to be able to reduce your cost of goods sold percentage? There's two real ways you can do that. Any idea what's a good way? Okay. All right. So I'll give you some hints. So, if you're going to reduce your cost of goods sold percentage, it's based on your costs over your sales. So either you can raise your prices with the same costs, that'll decrease your cost of goods sold percentage, or you can keep your prices the same and lower your variable expenses. So using the business model, you can look at ways to be able to do that. Next, we have the gross margin. So that's really just your revenues minus your variable expenses, gives you your gross profit. So that tells you basically the profit you make on delivering your products and services before dealing with your fixed expenses. And then next we have your fixed expenses, or your fixed costs. And that's based on, expenses that you have to pay whether or not you make any sales. So fixed costs are things that you got to pay whether you make any sales. They can vary, but they're fixed because of that. So that might be your rent, that might be your utilities, that might be your internet. All these things that you may purchase or may have to spend money on that aren't affected by how much you sell, and you don't have to sell anything, but you still have to pay the expense. And then the variable cost is any expenses that are incurred that have a direct relationship to your sales. And we'll go into that a little bit more because that can be kind of confusing. But, we just want to, first start out with just understanding the big picture. You got your sales or revenues minus your cost of goods sold or variable expenses, gives you your gross profit. And then you subtract your fixed expenses, that gives you your profit or cash flow, depending on how you look at it. So one thing that you look at, if you look at it really, if you took the gross profit out, you could just say your revenues minus your expenses gives you your profit or your cash flow. But there's a reason why we break it out that way. Not sure if anyone has an idea, but why wouldn't we just say revenues minus expenses equals profits? Why would we break it into variable expenses and fixed expenses? Any ideas? Okay. All right. Any guesses? Okay. Well, what that does for us is really that allows us to be able to do financial projections and analysis, because the variable expenses, they change based on your sales. And as a result, that allows us to, if you use algebra, to figure out what you need to sell to break even and just project what will happen in different situations. So if you didn't have that split and variable expenses didn't have a direct relationship with sales, then you wouldn't be able to do that. But because of that, that allows you to do a lot of things in terms of planning and understanding how your business works. So the ultimate goal is to increase your profits. So, working on growing your revenues, decreasing your variable expense percentage, which will increase your gross profit. And then you want to decrease your fixed expenses. That'll give you the profitability. So your goal is to increase profits and using your business model to figure out the best way to do that. So that's really what we're covering today. Any questions on what we just talked about? So your goal is to maximize profits. So any questions? Everybody got what we have, or do you want me to go over anything just a little bit more before we go forward? Okay. All right. So no questions. Great. So what I'm going to do is let's take a sec and take a look at a couple short videos that tell you a little bit about your business model and the profit and loss and how they really work. So let's take a look at this initial one. Share screen one. Okay. Okay, here we go.
Terms in business, but these are separate concepts with enormous practical value. And when it comes to concepts so fundamental to success, no organization can afford fuzzy thinking. The term business model emerged when personal computers and spreadsheets became common, says Joan Magretta, a longtime editor at Harvard Business Review. Managers could use these tools to literally run the numbers to see models of how various decisions might affect the bottom line. A new business model might hinge on either a different way to make something or a different way to sell something. Take discount retailers like Kmart and Walmart, for example. These pioneers applied supermarket logic to the conventional department store, and developed a discount retail model, which involved slashing costs by eliminating chandeliers, carpets, and personal service in exchange for lower prices. While business model is a description of how your business runs, a competitive strategy explains how you will do better than your rivals. So, for example, part of Walmart's unique strategy was to prioritize rural customers. In founder Sam Walton's own words, he put good-sized stores into little one-horse towns which everybody else was ignoring. And it worked. Focusing on rural areas let Walmart buy up land for cheap, target customers no one else was going after, and preempt other discount stores from entering the market in those areas. Their customer strategy thus reinforced other parts of their competitive strategy. In contrast, Kmart tried to appeal to everyone, and that's not a distinctive strategy. So while they may have a good business model, without a clear strategy, they've struggled to stay competitive. So to get ahead of your rivals, you not only need a good business model and a clear strategy, you also need a clear understanding of the difference between the two.
Okay, great. So that tells you a little bit about your business model, how it relates to your business strategy. So let's take another look at, not just your business model, but looking at the profit and loss and sort of how to create one and what it is. So let's take a look at this one. This tells you a little bit about what a profit and loss is, and then we'll look at how do you create one. So let's take a look. Okay. All right. Sorry about that.
What is a profit and loss report? Let's see. Profit and loss report, also known as income statement, is a type of financial report that has one main purpose: to show how easy it is for a company to create new wealth. Understanding the rationale of the report and learning how to use it can help you to understand how companies generate new wealth, help managers to improve the way the company generates wealth, and more importantly, also can help you identify businesses that generate wealth easily, opening the door to using this information to generate a lot of wealth for yourself and your family. It is an incredibly easy report and well worth your while to understand. Let's begin. At the very beginning, I want to introduce you to Jennifer and Mike. Jennifer is a lively, life-enjoying attorney that lives in a $2 million apartment in New York City. She drives a new Maserati Gran Turismo she just bought for $190,000. She earns about $270,000 per year working for a law firm. Mike is a software engineer, earning about $110,000 per year. He drives a nice car he bought 3 years ago for $20,000 and lives in a rented house that costs $2,200 per month in Orlando. Now, let's see if you can correctly establish who is going to possess $1 million first, Mike or Jennifer. All we need to find out is the answer to the next question: how easy it would be for each to earn $1 million in new wealth. To solve the question, we need to use the tool called profit and loss, P&L, or income statement. Let's see how it works. First, obviously, we would need to find out the entire story. What people earn is just half of the story. We need to find out about expenses. Well, here they are. Jennifer pays $156,000 per year to pay down her mortgage. She has been told that unless she starts paying back her loan to Dad, she is in trouble. Additional $30,000 per year. She also pays an additional $26,000 to her student loan originators. She needs another $50,000 per year for living and general expenses. Here's what that looks like, ignoring tax for the moment. This is the correct picture. Jennifer generates new wealth, net income, to the tune of $8,000 per annum. Somewhat disappointing taking into account the size of her salary. The main thing we can do to answer the question of how easy it is to generate new wealth is to find the ratio of her net income to her gross income. In Jennifer's case, only about 3% of her salary turns into net income, or new wealth, also called profit margin. Let's look at Mike's current expenses now. Mike spends about $36,000 on living. He has some expenses connected to some private projects he is entitled to pay at about $10,000 a year. His rent is $26,400 per year. For each $110,000 of gross income, Mike is generating net income of $37,600, which is about 34%. Now, that's a very good profit margin. In business, when the profit margin is high, we understand that someone is willing to pay well for something that is easy to produce, which takes little investment to make. For example, Apple is selling smartphones at 40% profit margin, while on the other hand, another company like Huawei is selling smartphones at 12% profit margin. As a rule of thumb, the higher the profit margin, the better it is. Congratulations! You now understand the basics of a profit and loss report, also known as an income statement. A couple of things to remember before you move on. 1. P&L is always done over a known time period, month, year, quarter. 2. P&L does not answer another question regarding wealth, which is how much new wealth is generated from one's asset or possession's valueless obligations. Check out Balance Sheet Tip for more on that.
Okay, great. So that's a little bit about the profit and loss. It really focuses on your revenues minus your expenses and understanding how they interact. And really that's how you work on becoming more profitable, because you got to understand your revenues, where they're coming from, as well as your expenses, what they are and how you can manage it. So let's take a look at, that shows you a little bit of what the P&L is. Let's take a look at actually, how you create a P&L. So got another video on that, and we'll check that out real quick.
If you want to gain insight on your actual sales, cost, and most importantly, bottom line, it's important to get in the habit of regularly creating a profit and loss statement. A profit and loss statement is a financial document that helps you determine specific information about how your business is performing. With a profit and loss statement, you can have a better understanding of your labor cost, the cost of your menu items, which dishes perform better than others, and how this all affects your bottom line. Let's get started. First, choose a time period that you want to analyze. This can be weekly, monthly, quarterly, and it's really up to you. Whatever time frame you choose, it's a good idea to create these statements regularly in order to compare how your business changes. Next, you'll want to record your sales in that time frame. Record how much your restaurant has brought in on categories such as food, wine, beer, liquor, and soft drinks. This way you'll have a better idea of how each category performs. You'll want to follow this with recording your cost of goods sold. This is just another way of saying the total dollar value of all the ingredients used to create each dish during that time frame. If your restaurant has standard recipes, this should be fairly simple to calculate. Add up the cost of ingredients for each dish, then multiply that by the number of dishes sold over the duration of the time period. It's important to do this for each dish on your menu. Next, calculate the amount that you spend on labor. This includes both salary and hourly wages, employee benefits, and payroll taxes. Calculate your operating expenses, things like suppliers, repairs, marketing and advertising, and music. Next, calculate your operating costs. Unlike operating expenses, these are fixed costs that you can't change, like rent, real estate, and property insurance. Finally, calculate your business's depreciation. Depreciation is the decreasing value of an asset, in this case your restaurant. Now that that's done, let's take a look at what your data is telling you. Click the card above to view the next video.
Okay. So that gives you a little bit about the profit and loss. And then here's part 2 on how to create your profit and loss. and then we'll get back and join and take a look at strategies for using your business model to increase your profitability.
Now that we have the information we need for a profit and loss statement, let's put it to work. Let's take a look at what we can learn from the information that we gathered. If you haven't yet gathered this information, click the link above to watch the previous video. You can find the percentage of sales of each of your categories by adding the sales amounts of each of the categories you chose. Divide a specific sales category by your total sales, then multiply the resulting number by 100 to find the percent of sales that category accounts for. Sales percentages are really useful to see where your restaurant's strengths and weaknesses are, and it can give you insight on where your sales are coming from. You can find your gross profit by subtracting your total sales by the total cost of goods sold, the sum of how much you spend in each category during their time period. Gross profit represents what you have available to put towards other expenses and profit. Your prime cost is the sum of your total cost of goods sold and your total labor cost. Prime cost represents the bulk of your controllable expenses, which you can influence through adjusting labor costs or through changes to the ingredients in your dishes. Operating expenses are the controllable expenses involved in running your day-to-day operations. This includes things like supplies, repairs, upgrades, marketing and advertising, and music and entertainment. Occupancy expenses are the fixed overhead costs related to things like the rent, real estate, and property insurance. These costs are fixed because you do not have the ability to alter or change them. Finally, your net profit or loss can be found by subtracting your value lost, total occupancy costs, total operating costs, and prime cost from your total sales. Here's your bottom line, and it's a key indicator of how your business performed over a duration of time. It takes a lot to calculate these metrics. If you don't want to do it yourself, click the link above to download a free profit and loss statement template. Just add in the numbers and we'll do the rest.
Okay, great. So that hopefully just gave you a little additional perspective on what the profit and loss looks like, and how you put it together. Any questions? Everybody good with what we've got? Let me know if you're ready to move forward, and we'll take a look in more detail about how do you work on your profit and loss. So if you're ready to work on, go forward with the P&L, just type P&L in the chat, and then we'll get started and move on to the P&L and how to improve it. Okay, thanks, Mel. Thanks, guys. So yeah, just want to know that you're with us. So yeah, just type P&L in the chat real quick, and then I know everybody's caught up, and we'll move on to the next part. Okay. Let's see. Okay, so what do we have? We look at our slides here. Thanks, Dolores. Great. So we've got going back over to our slides, and actually let me just do that. Okay. So we're going to take a look and talk about our profit and loss. So the first piece is our revenue. So we want to optimize our revenue strategy. So here's 4 key ways that you can do that. 4 good ways to be able to do that. One is you can have bigger transactions, or you can sell more in each transaction or each sale. 2, you can attract more customers, so getting more customers to buy your products or services. 3, you could raise prices. That can increase your revenues, but it could also decrease your revenues if you lose customers as well. And then having more frequent transactions, how do you do that? So what is an example of how a business increases transactions size or works on increasing transaction size? Just tell me about a business out there that you know of that what is a strategy that they use to increase transaction size? Anybody? So think in terms of fast food. How do fast food restaurants generally try and increase their transaction size? So anybody have fast food? Advertising, okay. So advertising, yeah, but there's one specific thing, contracts, okay. But what is the key thing that they do to try and increase the transaction size? Upsell. There you go. So they always want to supersize it or offer you a drink or offer you something else, because what they want to do is they want to increase the average transaction size. So that's one strategy for increasing revenues. So there's another strategy is attracting more customers. So what kind of things can a business do to attract more customers? So, you know, if you think about it, you're trying to get new customers, what can you do to do that? Okay, giveaways, samples, great. You know, have people try it. And if they like it, maybe they'll become customers. Okay, what else? You know, I think, Mel, where you said advertising, you know, advertising allows you to get your message in front of more people who aren't customers to potentially turn them into customers. So, you know, different strategies for each one in terms of revenue expansion. You know, you could raise prices. Anybody got an example of a company that, you know, raises prices as a way to expand their revenues? So, well, you know, there's a lot of technology companies. Brand name helps you to be able to raise prices. Okay, good. Dolores, you know, think of Apple. You know, it seems like their phones, every phone gets more and more expensive. And, you know, that's true with a lot of technology. That could be true with products as well, you know, luxury cars. So if there's demand, more demand than supply, then that could put you in a position where you could raise prices as a way to expand your revenues. And then more frequent transactions. What can you do to create more frequent transactions for a business? What do businesses do? What are some strategies that they do around that? Free product with purchase. Okay, so that could, you know, that, I mean, definitely can encourage people to buy. May not increase the transactions, but definitely that. Well, actually, that could get more people to come in more often. So yeah, so that's cool. Loyalty program. So what do you mean by a loyalty program now? So subscription. Okay, so you could have people subscribe, or you could say, you know, buy 10 hamburgers, get one free. You know, all those things to encourage people to come in more often. So, you know, when you're thinking about your revenue and growing your revenue, these are 4 of the major strategies for doing that. That doesn't mean you should be trying to do all 4. You may want to choose which one makes the most sense for your type of business and where your business is. But looking at being able to increase your revenue is key. One thing you have to keep in mind is sometimes to increase your revenues, it's going to cost you in terms of advertising, in terms of other expenses. So on the one hand, you may be increasing your revenue. On the other hand, you'll be increasing your expenses. So you have to keep in mind that it's an investment, and you have to make sure overall, whatever you're doing creates greater profitability for your business. So different pieces of the business model can affect others. And at the end of the day, you want to put together a strategy that, everything you're doing, the impact is increased profitability. So the first part is revenues. Next, we go to variable costs. So costs to deliver your products and services. So really starting to optimize your cost structure. And, your goal is to really lower your variable costs. So, example is volume discounts. So what does that really mean? When you're getting a volume discount, what does that mean? Anybody? So, when you're getting a volume discount, pretty straightforward. That's really about getting better pricing as a result of buying more of the materials or the products. Shopping around, because different places may charge you different prices for your materials. Becoming more efficient, that allows you to deliver more for less cost. Technology is a way that you can be more efficient, and then also redesign your products. You can redesign your products so they can cost less. So, at the same time that you're increasing revenue, you can look at, how do I lower variable costs? And these are 5 key ways that you can do that effectively. The next thing you can do is you've got your fixed costs. And, these are costs that you have to pay whether or not you're making any sales. So lowering those can help make you more profitable as well. That might be, making better use of time, being more focused, making sure that you're getting the most out of any rental or lease space you have, or having the minimal or reducing it, maximize employee skills so you don't have to have as many, or you don't have to get more. Delivering quality, definitely returns and other things really are a drag on your profitability and your efficiency. So if you can make sure that your quality is good, that's important. Bundling services. So, definitely, Dolores, thanks for sharing that. Okay, so yeah, in your business is a way. So, definitely different ways to minimize your fixed costs. And really, that's what your job is. If you're working on your business, this is what you're working on your business really is. It's about maximizing profitability by using your business model, and using your business model. So looking at your revenues, increasing your revenues, decreasing your variable expenses or cost of goods sold, then minimizing your fixed expenses. And by doing that, that helps you to increase your profitability or your cash flow. So that's really the main focus of what we want to talk about today. And, actually we went through it fairly quick. So first, is there anyone that wants to have us use their business as an example so we can talk about, working on your business model? and seeing how we can help you be more profitable. Any volunteers? Feel free to unmute, and we can chat about your business. So not only will you hear about it here, but you can learn about how to apply it towards your business. Okay, going once, going twice. This is a great opportunity. Free counseling and input from the group on how you can be more profitable and run your business more effective. All right, so no takers. Okay, so then I've covered most of the key things that I wanted to cover. Any questions on what we covered? Is there anything that you'd like me to go back over, go into more detail on, or just answer any questions that you have? Okay, feel free to unmute or type it in the chat. Okay. So really, that's the key things that I was looking to go over today. Hopefully this is helpful. I know some of it's advanced in a lot of new things, so you may not take everything away, but understanding that these are things that you can do to make your business more profitable, and some things that you should focus on, and tools that you can use. Definitely SBDC has a lot of different programs to help you learn even more. If you want to learn more about this, definitely if you take the business planning workshop, I do the accounting session, which is 5 hours, and the business finance section, which is also 5 hours. So you get like 10 hours understanding and learning about finance and accounting, which is key. And every business owner needs to know about that. Even before you're a business owner, it helps to know about that. So consider signing up for the business planning workshop. It's coming up in August, and other different programs that SBDC has. So, if there's not any questions, or anybody wants to use their business as an example, we'll just close out a little bit early. And Takoa, you can take back over.
Okay, great. Thank you so much, Andrew, for that informative presentation and for your time today. So if we don't have any last minute questions, I'm just going to inform you guys that if you are located in Essex County, you are eligible to apply for the one-on-one business counseling with Andrew if you're interested. So you can feel free to take advantage of that by visiting our website, www.rnsbdc.com. I'm going to put on the screen here, rnsbdc.com, or you can feel free to raise your hand at this moment, and I'll just take a minute or two just to write down your name, and I will set that appointment up with you and Andrew. Okay. And again, our one-on-one consultations are at no cost to you, so I do strongly advise taking advantage of that opportunity. At this time, I would like to direct you all to the chat. There you will see the direct link to request counseling on our website, some of our upcoming webinars, and as well as the Smart Business Plan Writing Workshop that Andrew did mention. So that workshop is on August 6th, starting at 9 a.m. And the link to that is the last link there in the chat that I posted, or the second to last link that I posted. And feel free to copy these links down, or I believe you're able to save the chat just so that you have all this information after and once the webinar has ended. And the webinars listed here are available again on our website, www.rnsbdc.com. This year, we are hosting many other webinars and workshops in areas such as financing, access to capital, COVID disaster loans, marketing and branding, e-commerce, credit counseling, startup assistance, state certifications, human resourcing, and so much more. So you can visit our website to register and sign up for those webinars and workshops, and you will definitely find a webinar or workshop that best fits your business needs. I do want to remind you all that you will be receiving the presentation slides and the video replay of this webinar within 48 to 72 hours so that you can have this information and apply the strategies and techniques to help your business grow. Once this webinar has ended in the browser, you will see a survey pop up. Now that survey will help us to adjust our presentations in the future, as well as give us some information on the type of assistance you may be needing for your business. So if you have just a minute or two to complete that, your feedback is very much appreciated. And on that note, we will now end this webinar. I want to say thank you again to our presenter, Andrew, for sharing your expertise with us. And thank you to all of our attendees for taking the time out today to participate in today's webinar.
Thank you guys. So really, I finally was able to unmute.
Yeah, we're glad that you're able to join us, Dolores. Thank you.
Okay.
Thank you.
And we look forward to seeing you all at our future webinars and workshops. Have a great day, everyone.